Good morning. Why smart investors never pay off their mortgage. And most people think paying off the mortgage early is your goal. And professional investors often do the opposite. And that statement may sound wrong at first on some levels, and I get that part, but it's exactly how sophisticated borrowers build wealth. And if you're focused solely on eliminating debt, you might actually be limiting your long term financial growth. So let's break down how experienced investors think differently and how you could apply the same strategy. The core principle here is that debt is a tool and not a burden. And most homeowners are taught that paying off your house as fast as possible is your end goal. But investors might ask a slightly different question, and that is, what is the cost of this debt versus what I could earn elsewhere? And that's where strategy beats emotion. So let's look at the math behind that. Let's say a mortgage rate of 6%, and you have a potential investment return of, say, 8 to 12%. If you pay off your mortgage early, you're effectively earning a guaranteed 6% return. And that's safe, but it's also limiting. So, smart investors instead would consider keeping the low cost debt, deploying new capital into a higher return opportunity, and then diversifying your assets. And really, that's that spread is where wealth is created. So, let's talk about leverage, the real estate wealth builder. And leverage is the ability to control a large asset with a smaller amount of capital. So, for example, say you have a $500,000 property with a $100,000 down payment, you're financing $400,000. And if that property appreciates or produces income, your return is based on the full asset and not just your cash. And that's how investors can scale. Liquidity is better than equity. So, when you aggressively pay down a mortgage, you are locking cash into that property and you're reducing flexibility and potentially limiting future opportunities. So, smart investors who prioritize liquidity, build cash reserves, have access to lines of credit and access to capital. Because when opportunities show up, speed is extremely important. So, let's talk about how inflation works in your favor. And this is the part that most people miss. If you have a fixed rate mortgage, your payment's going to stay the same for the whole life of the loan. But the value of that money that you originally borrowed is going to decline over time. So, you're making money. And in simple terms, you're paying back your loan with cheaper dollars in the future than what you borrowed originally. And that's a built in advantage. So let's talk about tax strategy matters. And mortgage interest can often be tax deductible for primary or investment properties and helps offset against income earned. Meanwhile, investment gains compound and rental income builds cash flow. It's not just about the rate, it's about the after tax returns, what's actually ending up staying in your pocket. And when paying off your mortgage does make sense, well, this isn't a one size fits all strategy. And paying off your mortgage early can definitely be smart. If you're a risk averse client, if you're nearing retirement in like predictability, and if you have no better investment opportunities to be placing that money, or you just need peace of mind. And I get all of those. But for growth focused borrowers, it's usually not the optimal move, is all I'm saying. So let's talk about how professional borrowers think. And they'll focus on the cost of the capital, the return on the capital, and the liquidity and flexibility, but also the growth of the portfolio. And they don't just ask, should I pay this off? They'll be asking more like, where does this dollar work best? Is there another opportunity? So the bottom line for the day is that paying off your mortgage early can feel safe. But building wealth requires strategy. And the goal isn't to eliminate debt. The goal is to use debt intelligently. So, call to action for the day. If you're buying or refinancing or investing, considering investing in the next 12 months, structure matters more than rate, and a mortgage broker can definitely help you by preserving your liquidity, optimizing your leverage, most financing, but also aligning your financing with your long term strategy for the property. My name is Bill Rapp. Please connect with me directly and we can build your financial game plan. You can visit my website, billrapponline.com, to figure out how to get hold of me. Love to talk to you more and have a conversation. Take care.